Good morning. Happy Friday. Brett here with Frame Home Loans and this week's Friday market recap. So, closing prices of the 10-year note Monday, 4.341, Tuesday, 4.302, Wednesday, 4.296, Thursday, 4.33, Friday, so far today, 4.254. So, tight range there, but down overall for the week. Really today, Powell's speech earlier this morning helping to drive that 10-year note and interest rates down just a bit. A couple of key comments he had mentioned to ultimately the shifting balance of risks may warrant to adjusting our policy stance. While this is still not a direct commitment that Feds will lower rates at the next meeting, definitely alludes to that fact, which is positive for markets. A few other key comments in his speech were one, Fed is going to adopt a long term policy, kind of similar to what they've been saying, but maybe a little bit different view future wise for us. Fed may possibly increase its inflation target. And that could be big for a change in policy. Kind of chatting through the fact that tariff prices may be short lived. There was a lot of concern that tariffs would massively change inflation. Now, maybe some comments are, okay, that might be more short lived. And then that slowdown in job growth is increasing. So we're seeing, okay, a little bit of a slowdown there for us. All these comments help paint the picture that the Fed may be getting to a point to start changing that policy. They've held pretty dang firm for quite a while there's been a lot of pressure on them to see some movement. So I think these are all positive comments from that perspective. Mortgage rates in general, they're still struggling to come down anything substantially. We're really seeing, again, that floor at that 4.2% in the 10-year note. I think since last November, we've seen maybe 11 days where it broke under that 4.2 mark, and the max it held was for 4 days. So that's definitely a big resistance point. But if we can see some shift in the Fed policy over the next 3, 4, 5, 6 months, that could definitely help rates to start moving in a different direction for us. Now, on a positive note, something we have seen that's more recent here and kind of went away during the COVID era was the traditional spread between a fixed rate mortgage and an ARM. For example, like a 7-year ARM or a 10-year ARM, which are great options for clients. So finally, we're seeing that spread return, opening the door for quite a few really reduced interest rate options for clients. That could be great. So as a lot of folks were feeling this interest rate pressure over the last few years, this ARM option could definitely be a scenario for the right buyer to finally open the door to some lower rates and better buying power, or again, opening the door for refinances for these clients. So ultimately, positive news on that front. As always, thank you for the time. Anything we can help with, we're always available. Feel free to reach out. Other than that, have a great weekend. Take care. Bye.